My name is Phatheka Milphale. Abaningi bambiza sis pet. So if you hear people saying sis pet, sis P, yeah, wherever I go. So I'm from PP Milphale Incorporated. I'm the founding director there, and we are specializing in property conveyancing, property development, trust registrations. Those who want to get married, we also assist in terms of antinuptial contracts.
Can we start with just understanding? Because I think it would be incorrect for us to assume that everybody knows what a trust is. So could you please just tell us what a trust is?
Firstly, we just need to understand that when one creates a trust, when we were hearing people talking about trust fund, babies, and all of that, that's exactly what we're trying to do when we create these trusts. You are creating a structure whereby you want to keep or keep the assets, not for you, for those that you have listed as your beneficiaries. So, meaning there is some control that you are now removing from yourself. Now the control will be in the hands of the trustees on behalf of the beneficiaries. So I'm just trying to put it in very simple terms. So what does that mean? It basically means that one, whoever is the founder of the trust needs to have an intention. What are you trying to do? Why are you creating this trust? So when I was talking about that 30 minutes free Zoom meeting, those are the things that I ask because I need to know what exactly as a founder is your intention. So are you intending to create this trust so you can keep assets, and then you know that these assets are going to be kept for the benefit of your beneficiaries, and those beneficiaries are going to be there, and the beneficiaries most of the time are your children, and then your grandchildren, your great-grandchildren. So I think importantly is the intention of the person whom we call a founder. That person needs to put it down. Why are you creating this trust? You're creating a trust fund. And now the nice thing about the Trust Property Control Act, it allows you to be the founder, to be the trustee, and to be the beneficiary. So you can be all those three people: the founder, the trustee, and the beneficiary. So meaning now if you are that founder, the trustee, and beneficiary, then there is a requirement to have an independent trustee, then someone who's going to be independent in the decision making, because obviously you can't contract between yourself. So the underline here is that why are you creating this trust? What's your intention? So I think that's where it's important, so you can understand that then if you create this trust, you need to have trustees. What are the obligations of these trustees? Again, you need to have beneficiaries. Who are these beneficiaries? Because if you can get it from that part, I tell you, you would understand then why you need to have this trust. Because trustees, you can't just think that anyone can be a trustee. You need to get people that you trust. You need to get people that would understand the terms and the dynamics of trust administration. And your beneficiaries also, you need to appoint those people, because also importantly, when you appoint beneficiaries, to note that you can't just remove them. Those people, you can't just decide that I don't want this one to be a beneficiary anymore. Because in order for you to remove them, you're going to require consent from them, so they can agree that yes, they can be removed. But then problem comes when they say no, I can't be removed. So something like that. So that is why I'm saying I think the basis of this whole thing is to understand, one, what's your intention of creating this trust, so that at least you should know this is what I want to do. It will make it easy for you now to understand what is it that the trustees are going to do for you, and also who are going to be your beneficiaries then. because you don't want to just appoint anyone. You want to appoint people that they will be indeed your beneficiaries. I always say to clients that, think about those people that you can put in your will, or if you will to draft a will. Those are the people that are going to be your beneficiaries.
Sure. You touched on four role or key players when you're looking at a trust, right? You talked about the funder, the trustee, beneficiaries, and then the independent trustee, right? So for the people that do not know, can you please just summarize their roles in the trust or how they feature in the trust?
You can be a founder, you can be a trustee, you can be a beneficiary. Ne? So meaning I'm just gonna make an example here or create a scenario. So Phatheka is opening a trust as a founder. So the aim of opening this trust is to ensure that my assets are protected and also to save on tax, and then also to ensure that my estate planning obviously is part of this sort of structure. Ne? So I'm going to create this trust. I'm going to be the founder of this trust, ne? And I'm also going to be the trustee of the trust, and I'm also gonna be the beneficiary of this trust. Ne? We're gonna because I think it will be a topic of another day to have a differentiation of two trusts where we're talking vesting trust versus the discretionary trust, ne? Because there's one that I'm favoring, which at least gives you as trustee some flexibility in terms of choosing how and who to benefit. Ne? Okay, so now coming to these parties, the founder obviously is someone who is now the one creating this whole trust fund. So the founder is the person who has the intention of creating a trust fund for the benefit of those that he would choose to be the beneficiaries, right? Okay, so when we talk about the trustee, let's say you are the founder like me, founder and trustee. So when we talk about this trustee is the person who will administer, actually is responsible to ensure that the administration of this trust, it goes accordingly, according to the trust deed. There's what we call a trust deed that all the trustees sign that outlines the responsibilities, the duties, the obligation, everything concerning the trust administration. So meaning the trustee is the person who's been given the authority to look after the trust assets, if I can put it in that simple term. So he's looking after the trust assets in the manner of ensuring that these assets are kept in the trust. The trust is actually compliant in terms of SA law, and there's a lot that this person can do. For example, if there are properties in the trust, he's got authority. Obviously, there's going to be resolutions signed by all trustees appointing whoever. So these people, they have authority to ensure that if they buy properties to the trust, they do so. If they want to resell, they do so. If they want to apply for a bond on behalf of the trust, they do so. So the whole administration of the trust lies on the trustees. That is why I mentioned earlier that you don't just need to appoint anyone as a trustee. You appoint someone.
Trustee is dangerous.
You appoint someone you trust, and you appoint someone who would understand exactly what is required of him.
Wait.
And now coming to beneficiaries. Beneficiaries, as I mentioned, I usually say, who would you want to benefit from your estate if you die? Those are the people that come first, né, as your beneficiaries. So, for example, in my trust, I've got my children as my beneficiaries, right? And because I've chosen a discretionary trust, so whoever is a trustee with me, if it happens that I pass on, those people then will be left to be able to decide, okay, how do we get these beneficiaries to benefit? Because you can choose to have your beneficiaries to benefit monthly, or you can choose to have these beneficiaries benefiting a capital amount, depending on how you would want to do it. So that is why I was saying the basis of this whole thing is the intention of the founder. What is it that you are trying to do? Because if you don't have any intention, then it means it's going to be a little bit tricky for you now to know how to administer this whole trust, right? So beneficiaries then are listed as beneficiaries in the trust deed. So whereby you're saying these are going to be my beneficiaries in my trust, then because it's a discretionary, then I can be able to, okay, from my 3 children, then this is what I can do. I can choose the last born, for example, to be the income beneficiary monthly, or alternate depending on how I want to do it, and then I can choose maybe the elders to be the capital beneficiaries. So I can choose either way, right? So that is what is nice about a discretionary trust. So the beneficiaries then in a discretionary trust are sitting there waiting to benefit. So meaning they don't have a control of what's happening within the administration of this trust. They are sitting there waiting to be given something by the trustees. It's different, okay, if Phatheka is a founder, trustee, and beneficiary, because obviously I'll be part of the decision making in terms of how to benefit. But the trust deed is there to guide the trustees in the manner in which they need to administer this trust. And then also importantly is that so now my train of thought, it went off, because I wanted to say, when we assist clients to register a trust, those who have engaged with me, they will know I don't proceed to draft any of these other documents until me and you understand this trust deed, because this trust deed carries a lot in terms of guidance on how to administer this trust. So we go through this trust deed together. It's a document that is more than 15 pages. So we go through it together so I can make sure that you have an understanding. And then after that, once we are on the same page, then we can proceed. Because a lot of times people think that I'm creating a trust and I will have control. If you are not a trustee or even a beneficiary, you cannot even have a control on what's happening here, because you have created it not for you, for those people. The only thing that you are doing here is like sort of like employment to ensure that everything runs smoothly. So as long as, that's why I was saying, the intention of the founder is important. The duties, the obligations, the responsibilities of the trustees are important, and also the understanding of who your beneficiary should be, because you need to be able to select the people that you know, but you're not going to change your mind at a later stage.
Once we've registered a trust, how much is it to maintain, or is there a cost to maintain monthly or annually? What is up with that?
Okay, so I always, I remember we were having a workshop where in Cape Town we were talking about how many trusts one should have.
Yeah.
So I think the most important, which is why I decided to have a free Zoom meeting to understand, it's because some people, when they come forward for assistance, they obviously, you have been told that you can register as many trusts as you can, or 2 or 3, whatever. And then also some people, they just want to have one, but they just want to understand the dynamics in terms of management, right? Now, what is important to note here is, at the time when you were creating this trust, it depends on whether you have assets or there are no assets yet. Because I always recommend that if you know that this is how I want to structure my things, then in that case, a trust is going to be needed in the future. So if you have enough funds, you can register it now, and then keep it, because obviously it doesn't get deregistered just like a company. Eh? So meaning you can register it now while it's still affordable to you, and then you will use it later, right? Or what you can do, you can register now if you have assets. Then if you have assets, you register now, deal with the assets then accordingly, depending on how you want to structure your things. Because this, because I know a lot of people always have this myth of a trust being expensive to maintain. A trust is not expensive to maintain, right? Why I'm saying so is because, yes, the trust needs to open a bank account, number one, and then number two, the trust needs to register as a taxpayer. Yeah? So as a taxpayer, you have to declare something to SARS, right? And if there's something to declare, SARS is going to tax you. And mind you, that the tax bracket here trust is 45%, né? As opposed to a company or individual, right? So, but if you don't have, because you must just look at the numbers in terms of what is it that I have within this trust to make it expensive. Because I would say, Guti, if you register like a property that does not have income activity, generating activity, so how is it expensive? You know, because there's nothing to declare to SARS Guti, I'm receiving income in this trust.
Yeah.
So meaning there won't be tax obligations then, because just like any other entity, you will submit your nil returns or SARS. Ne? So meaning there's nothing to be paid there. And then also because there is a requirement of an independent trustee. So that person most of the time is someone who gets paid. Ne? Remember also that person, as long as that person is not related to you by blood, it can be your friend, it can be your colleague, you know. So meaning that person, if for example, I'm creating a trust and I choose Ulebo, I'm not related to Lebo by blood, ne? Then in that case, Lebo would be able to help me, and then I don't need maybe to even pay Lebo. But then if you go and appoint Phatheka as an attorney, because you just want to make sure that izinto zakho zihamba kahle in case you doubt Lebo, ne? And then you appoint Phatheka as an attorney, or you go and appoint an accountant.
Yeah.
Then obviously those are professional people. Then there's going to be a minimum amount payable. Now, corner, depending on what activity is happening within the trust. Because if there is no activity, then those people are just going to charge minimum fees, because there's supposed to be meetings every year. There's supposed to be a trustee meeting once a year. Now, that's the requirement. Or there must be a trustees meeting at least once a year. So those people, if they have to convene those meetings, obviously they will charge you a fee for that. But what else if there's nothing happening within the trust? Because if you're creating a trust just to keep assets and not to have assets that will generate income. So that is why for those who didn't join earlier, I was saying that the intention of the founder is the most important, because that's where you will understand the cost implication, because it depends from one person to the other.